Welcome to Inside the Markets from GMS Podcasts, your weekly insight into ship recycling, pricing, and what's really happening on the ground. I'm Vagelis Chatzigiannis, head of the Greek office of GMS, and today I have the pleasure of speaking with Jamie Dalzell, head of our Singapore office. Jamie works closely with owners, yards, and traders across Asia, so he has a front row view of how regional trends are shaping the market. Jamie, welcome.
Thanks, Vagelis. Great to be here and to finally be on the receiving end of the questions.
All right, let's start with a broad picture. What's the current mood across the recycling markets?
The word I'd use is cautious. India remains the busiest, but we're nowhere near the flood of supply people expected by mid-2025. Pakistan is showing strong intent with competitive prices, but actual concluded deals remain limited. Bangladesh is still very quiet, and currencies are dictating a lot of sentiment, especially in India, where the rupee has slipped to record lows. Deals are happening, but in smaller numbers and with more hesitation than we'd like to see.
Interesting. Jamie, one thing I've noticed is the dry bulk index kind of creeping up again. How does this impact the decision in recycling a vessel?
They play a huge role. When smaller bulkers like Panamax and Supramax are enjoying stronger earnings, owners have every incentive to keep them trading. Capesizes are flying with stronger earnings, keeping them firmly in trading mode. The same goes for feeder container ships. Earnings are strong, so there's no incentive to send them for recycling. In fact, it's really only the very oldest or distressed units across sectors that might consider the beaches right now. So freight markets are delaying the supply of candidates, and that's a big reason why volumes are thinner than expected right now.
All right, we'll have to go region by region. And let's say we're starting with Bangladesh. What's the situation there? Can you give our audience a little bit of better insight there?
It's difficult. We've had 2 straight weeks without a new arrival, and that's telling. Inflation is high, plate prices are flat at about $542 per ton, and politics ahead of next year's elections adds to the uncertainty. Owners don't see the incentive to sell into Chetgram unless they have a large LDT vessel that might catch a buyer's eye. Smaller ships are bypassing Bangladesh completely.
And what about India?
India is the busiest. Alang logged about 7 vessels recently, although some were earlier arrivals finally delivered. Steel prices have climbed slightly to around $449 per ton, but the rupee's fall to 88.3 against the dollar is eating into margins. That volatility makes recyclers nervous about committing to new tonnage. What keeps India strong is compliance. With more than 100 HKC-approved yards, it remains the safest choice for owners who want predictability and proper documentation.
But Pakistan also seems to be showing some signs of stability again. What's your view on that?
Yes, Pakistan has positioned itself well. Plate prices there are around $622 per ton, the highest in the region, and the currency is holding stable at 281.8 to the dollar. That combination gives recyclers the confidence to make offers. But the reality is that actual activity is limited. Only 1 vessel arrived recently, so while Pakistan has the right fundamentals and is making progress with DASR approvals, we still haven't seen that translate into volumes.
Thank you so much for this. And being based in Singapore, which is a hub for many international owners, what are you hearing locally?
Owners here are very focused on compliance. Most of them want to avoid any risk of sanctions or reputational damage. The question I get most asked about IHM documentation, flag state differences under HKC, and how to time sales so they don't get stuck with delays at the yard. There's also interest in flexible deal structures, things like sale and leaseback, where they can unlock value from older ships but keep trading them until delivery. So while the mood is cautious, the focus is on planning ahead rather than rushing into sales.
And since the Hong Kong Convention has come into force, how much has it changed the way deals are being structured currently?
Of course, it's changing things significantly. Compliance is now the first filter on every transaction. Owners need full IHMs, recycling plans, ready for recycling certs from flag, and they want clarity on whether the yard is truly certified. That takes more time and more paperwork. Sanctions add another layer. We've seen vessels arrested in Alang because of links to sanctioned trades, and no owner wants to be caught in that situation. So deals are slower. But in the long run, this is healthy. It pushes the industry towards more transparency and responsible practices.
Okay, and before we wrap things up, let's try to have a look at the last quarter of the year. What would you expect of the next few months that are left?
I think we'll see more tankers coming into play as older units finally exit the trading fleet. LNGs will remain important for India, which has proven it can handle them well, along with Bangladesh, of course, which has taken several this year. Pakistan will continue to be the price leader on paper, while India will stay the most reliable destination for compliance. Bangladesh is unlikely to make a real comeback before the end of the year, until the interim government perhaps changes when the elections come into play in February next year. The biggest factor to watch is the rupee in India. If it weakens further, Indian buyers may have to scale back their offers.
Okay, and in terms of tonnage, what is the most vessels you would anticipate to show up for recycling over the next few months?
Well, I would say tankers.
And the preferred recycling destination today for this sort of tonnage would be?
I think, as mentioned, India for compliance, Pakistan for price, but volumes into each location remain pretty muted.
You don't really expect Bangladesh to recover soon?
Not for the end of the year because of the inactivity of the interim government to stimulate any infrastructure projects.
Interesting. So you'd say that the biggest risk for the market right now is what?
At the moment, it's currency volatility in India, which is falling to record and historical lows, is proving a big barrier at the moment.
The market that you're covering mainly in Singapore region, what is it that the local owners are watching closely in terms of tonnage handling from their end?
Tankers, especially older units.
All right, Jamie, thank you so much. That brings up the end to our Singapore special. We've heard now freight markets are holding back supply, why India is acting is acting a little bit nervous, how Pakistan has strong fundamentals but limited activity, and why Bangladesh is still on the sidelines. My thanks to Jamie Dalzell for his insight from Singapore and for helping us understand how compliance, currency, and capacity are shaping today's ship recycling market. Inside the Markets will be back next week with more updates from our GMS country heads. Follow GMS Podcasts on Spotify, Apple, or YouTube, and comment with us on LinkedIn for the latest ship recycling intelligence. Until next time, stay informed, stay compliant, and stay ahead.